So let's talk about the 3 most common tax penalties that you could potentially run into as a taxpayer. The 3 common penalties are failure to pay estimated tax payments through the year, failure to file your tax return on time, and failure to pay your tax liability on time. The first penalty is failure to pay estimated tax payments. This is typically a common penalty for business owners. So what this is the IRS basically says that throughout the year, there's a certain amount of money that needs to get paid throughout the year by the end of the year based off of how much you're gonna owe. And if you don't get enough money in through the year by the end of the year, they're gonna charge you a penalty for not making those estimated tax payments throughout the year. So for example, let's say I don't send anything in, and when it comes time to do my taxes, I owe $10,000. The IRS, and if you live in a state that charges taxes, are gonna look at how much money you've sent in through the year in relation to this $10,000 that you owe. A certain amount of money, typically it's 90% of what you owe for that year, or 110% of the prior year tax liability has to get paid in. So if I owe $10,000, I need to get at least $9,000 in through the year by the end of the year. And if I don't, they're gonna hit me with failure to pay estimated tax payments. Now, the penalty and interest for this penalty aren't that severe. It's more of a slap on the wrist than it is anything. But as your liabilities get bigger and bigger, this penalty could start adding up. So the most severe penalty is the failure to file your tax return on time. Let's say I have a personal tax return and I'm coming up on April 15th, April 17th, depending on the year. And for whatever reason, I don't file that extension to give me more time to file the tax return timely. If you don't file the extension or you don't file your tax return on time, the penalty for not filing your tax return on time is 5% of the unpaid tax that you owe per month, which is essentially a 60% interest rate on whatever balance you owe the government for not filing on time. Now, there are some limits on how much the government can charge on this late filing penalty, but this penalty at 5% per month, the equivalent of a 60% annual interest rate, is severe. And we need to do everything we can to avoid that penalty by simply filing an extension. And this whole system in place of assessing a severe late filing penalty is to encourage taxpayers to, at the very least, file your tax return on time, or at least file an extension so you can have more time through the year to file your tax return. Understand, if you're someone that typically gets a refund every year and the government owes you money, there really isn't a due date on when you need to file. That 4/15, 4/17 due date does not apply, and you don't need to file an extension. However, you have 3 years to file your tax return and claim the money, or else whatever refund amount that's actually due to you, the government will just keep it. You don't get it. So make sure that if you're behind on tax and you typically get refunds, you're still filing within that 3-year mark, because that's essentially refund money, that's your money that the government will keep. The last common penalty is failure to pay your taxes on time. So the due date to pay your tax liability, regardless if you're on an extension or not, is April 15th or April 17th, depending on the year. If you can't pay your taxes on time, the penalty isn't that much. It's only 0.5% of the unpaid tax, which is including interest, about a 7 or 8% interest rate, which isn't that bad. But it is something that can add up if you owe the government a lot of money. Those are the 3 most common penalties, and I hope this gives you some insight and points you in the right direction.